price of Brent crude, a barrel of Brent crude, the international benchmark for the price of oil, is incredibly close to $100. Now, the last time it was up at this level was just before the financial crisis broke in 2007. Once again, stock markets are reaching extremely high levels, record highs, and the oil price is up there again at the $100 a barrel mark. Does this mean that disaster is coming? The person who maybe can tell us is Michael Tamvakis, a commodities expert at Cass Business School. So what's pushing oil up to these incredible levels?
Well, a number of factors. The long-term factor is the resurgence of the Chinese and the Indian economies, who seem to be doing well again. And there are a few short-term supply problems, disruptions such as Alaska, for example, and the North Sea, which obviously will rectify themselves quite quickly. But I think the main driving factor for this increase, the fairly quick increase in the last few weeks, has been primarily the resurgence of the emerging markets again.
So, if it's going to go through the $100 a barrel mark, how high can it go? Presumably that's a sort of psychological barrier. Once it goes through 100, where's it going to stop?
Well, it is anyone's guess where it is going to stop. We know that the markets have tried in the past to push it over the 150, yes, and they were nearly successful. Perhaps this time they may try the 200. But ultimately, what is important is what is the average price over the course, say, of a year, because this is what is going to determine how costly the price of oil is going to be in the manufacturing processes of, for example, the Chinese economy or the Indian economy or the other emerging markets. So I'm not particularly concerned about the headline price that grabs the news. I'm more concerned about what is the longer term or the medium term rather average price of oil.
Yes, it's interesting you mention the $200 a barrel mark. One of my colleagues recently interviewed Jim Rogers, the former business partner of George Soros. He was predicting $200 a barrel for the oil price, and he was predicting that that would spell disaster for the global economy. Do you agree?
Yes, I would say I would agree if the market, the price touches 200 and it stays there for a considerable amount of time, because as far as we know, this is too much for the world economy to absorb, and it's not only the Chinese economy that needs to absorb it as a cost. We as final consumers of oil, and we're still very much dependent for our daily transportation on oil's products, we are going to cut down our demand substantially, and this would mean, as you said, disaster for the world economy. As I said, 147, the previous high, was not maintained for a very long period of time. So ultimately, in 2008, the average price was probably about $100 a barrel. So the world economy has shown that it can absorb it. Now, the issue for me is that who is actually going to drive the price to perhaps 200, and it is a number of players in the market. So, for example, it is not only supply and demand fundamentals that drive the oil price, it is very much the commodity markets themselves. And we know that there are quite a lot of players there. We have big investment banks, big hedge funds that use oil as an asset class, or commodities as an asset class.
People are betting on it.
Absolutely, they are betting on it. And unavoidably, if there are a lot of long positions, the net position is long, as we say, then the market is going to push the price of oil higher and higher. I'm still not entirely sure that it is going to push 200, but it is still very early in this year, and the 147 happened in the summer of 2008, so we have a good 6 to 7 months still to go, so we may yet still see it.
Of course, in Western countries, consuming countries, we tend to see high oil prices as a bad thing. That's not the way it's seen by many of the countries in the Middle East who are producing the oil. But your view is that high oil prices aren't necessarily a bad thing for us either.
Yes, although I have to qualify this by the level at which prices are deemed to be very high. But for the time being, let's say a price level of 100 to perhaps 110 or even $120 a barrel is something that can probably be absorbed by the world economy. I say probably because it's still quite weak. It is also extremely good news for the oil producers, and I don't mean just the national oil companies, the classic companies which are OPEC members, for example. I'm talking about the international oil companies. If we want to go into more extreme areas for drilling, like for example in the Arctic, and we have all heard the news of BP signing the agreement with Rosneft, so if say in 5 years' time they find the oil and they want to extract it, they will only do it if the price of the commodity is appropriate, because they will probably, I expect, will have quite high production costs. Now, for the final consumers, obviously this is not particularly good news in the short term, but there is also another factor, and something which I'm sure hasn't escaped our attention, is there is a lot that is being done on the technology front to substitute oil products rather, in transportation. So, for example, if we want the research or the research and development in electric vehicles, hybrid vehicles, etc., then high oil prices will make sure that we can carry on the research, because whatever Toyota Priuses or Chevy Volts, for example, we churn out from the factories, we will only be able to sell them if the price of oil is quite high, so we're all ready to accept the alternative.
One last question. I remember from my own economics classes here at CAS being told that OPEC, the oil cartel, was the ultimate example of why cartels don't work, because whenever it's in the interests of the cartel to restrict supply, keep production low so that prices go up, almost every time someone cheats. What do the current high prices tell us about the effectiveness of OPEC?
Well, OPEC is a very interesting story because its effectiveness changes depending on what the international markets do. So when the international price of oil is very low, then the OPEC reactions are usually fairly effective. It is really salvaging, if you like, the organization from the brink of collapse. Now, in situations like the current one, what OPEC has mostly done is nothing. They have sat on a very comfortable price of oil. They have recently repeatedly said that they are very happy with the price of oil around $80 a barrel. The price has gone to 100 or nearly 100, and I don't think they haven't indicated that they want to change their policy now.
They can't be too upset over that.
Absolutely, but they have, although it is very much political still as an organization, it does work most of the time on economic principles as well. So they are very aware, their economists are very aware that if the price of oil remains high for a sustained period of time, then it may mean that it will curtail demand. So I'm sure they will be looking into opening up the taps, as it were, in order to supply further quantities of oil to the market. So as an organization, it's still very interesting, it's still very relevant, not just historically interesting, but currently interesting as well. So I think we will see OPEC stepping into the scene again if the price of oil, say, exceeds $120 a barrel.
Okay. Michael, will you come back and talk to us again when we get to 120?
Absolutely, it will be a pleasure.
Thank you so much.
Thank you.
More CAS Talks next week.